We've been talking about the earnings coming this week. I want to focus in on one company in particular. That is Tesla. Right now, the shares are a little changed, but they have had quite a rally this year. They're scheduled to report on Wednesday after the close of trading. Let's bring in Colin Rusch. He is Oppenheimer Managing Director and Senior Research Analyst. He's joining us on the phone, and he covers Tesla. So, Colin, you have an outperform rating on the stock. I believe your price target, unless you have changed it, is 968, which is below where it is right now. So it sounds like then, at least extrapolating from that, you think the stock might be a little overvalued here. Is there anything they could say in the earnings report that would change?
No, thanks for having me first off. Secondly, just in terms of the price target and the move that happened in the last few weeks, because this stock really has rallied almost 55%. Just since the beginning of July on better than expected deliveries for the quarter. So really what's at stake for the company and why we've been dragging our feet around the price target is really about the earnings power. And that, at the end of the day, we think is driven by the gross margins. So what we're looking for on Wednesday evening is really progress in the Shanghai facility and demonstration that gross margins are holding up. And that's going to be a combination of the cost outs and the efficiency that they're getting on that China factory and their average selling price holding up. We've seen some price declines, which we think are partially driven by the fact that they've reduced their manufacturing costs, but we really want to get a good feel for where those gross margins shake out. Now, there's two other elements on evaluation that are really important. Secondarily is the progress towards incremental volumes. They've got a factory that's beginning to go forward in Germany, and then the incremental factories in China, as well as the Cybertruck factory. So when we look at all of that combined, we see potential for 50% upside to our estimates for 2024. We want to see some incremental progress there. And then the last piece really is the self-driving and the amount of data that they're collecting off of all the vehicles they have on the road. We think they have a pretty substantial lead in terms of data collection. Translating that into level 4 or level 5, which is full self-driving vehicles, is critically important to some of the longer-term upside metrics for us. So those are the three things that we're watching for on Wednesday.
Should an investor consider whether, the price of these cars, there's nothing in the $20,000 range. So you've already knocked out people of middle to lower incomes right there. And going forward, gas is going to be pretty cheap for the next couple of years. Is that going to be a concern for the stock price going forward with Tesla?
I don't think so. What we're seeing is that folks are buying Teslas and buying electric vehicles on a values-based investing. It's similar to going to the grocery store and buying organic, or buying things for kids with natural materials. We think this is really about consumers investing in what they want to see in the world, and certainly are willing to pay a premium for it. You also have the benefit of a really fun car to drive, and the fact that other OEMs have been slow to enter the market with really viable competitive vehicles. We continue to believe that Tesla has advantages both on the battery technology in terms of the cell chemistry, but also throughout the powertrain in terms of the efficiency of the overall system. And we've seen that in terms of range as well as weight metrics.
Hey, Colin, Rick Newman here. A valuation question. Tesla's market share, I think, is still under 1%, and the market share for all forms of electrified vehicles made by everybody is under 3%, and yet Tesla is the most valuable automaker in the world. I just checked, worth almost $100 billion more than Toyota. Does that make sense?
It makes sense if you believe in the disruptive nature of the technology and the disruptive nature of the platform. And so as we look at, the market as a forward-looking entity, and then looking out 4 to 5 years, which is where I think a lot of folks are making bets right now, considering uncertainty short term. We're seeing folks really making bets for, 2 to 5 years out. Tesla can, has the potential to really disrupt the auto market in all major segments. If we're looking at the light duty segment as well as the heavy duty and last mile, middle mile delivery space. And so as we look at that, if you believe that story, that's where this can make sense. And so far, what they've done is demonstrate at least a multi-year lead on all of their competition in those areas. And then you start layering in the prospect of autonomy and the various business models that can go with that technology. You can really see a transformation of the overall space, the overall transportation market, but certainly in terms of the revenue and the cash flow model, and you start to think about something that looks more like a SaaS type model and SaaS type multiples. So as we look at this company, we're using a 40 times multiple with an aggregation of various disruptive technologies and tier one auto suppliers as well as automakers to come up with that valuation. But it's really looking at how disruptive the technology is, and really it's around the powertrain and around the navigation system.
Hey, Colin, when do we get these vehicles down to the price of gas vehicles? I mean, it's something that, has been talked about for some time. Clearly, that's the reason why a lot of people don't purchase them still, outside of that the major manufacturers don't have any that are really quite as cool as Tesla's. When do we get to that point?
I think we're within a couple of years. I mean, there's a couple of things happening right now. So if you look at kind of a base model for a lot of the vehicles in the road on that low end, you're looking at kind of cost structures in the $18,000 to $20,000 range for the low end versions of those. Up to $23,000 to $25,000. And as we look at the incremental performance on the batteries, and I think we're going to hear a lot about that at the battery day that they have scheduled for September in terms of their ability to increase the power density in those batteries, which is going to allow them to reduce weight, which then allows them to extend range. You get a trade-off there. So I think we can see a path, by 2022, 2023, where with the advanced battery technology, that they're going to be able to take some weight out and really continue to drive costs out of the supply chain for the vehicles and hit those price points where you really start to open up some of the higher volume, buyers and really compelling economics.
Well, we'll have to wait for that, but we will get the earnings numbers again after the close of trading on Wednesday. Colin, thanks for your perspective. Colin Rusch is Oppenheimer Managing Director and Senior Research Analyst.